Hey, what's up YouTube? This is Leo with DRIPCalc, and today I want to make a video about Enphase. They just reported earnings for Q3 and the stock is down 12% right now. In the after hours it's down to $81, and I want to make this longer format video, so I ask for your patience, number one. Number two, this is not a financial advice. I don't tell you what to do. I'm not a financial advisor, so just this video is for informational purposes only. Number three, as always, I ask you to smash the like button, subscribe to the channel. YouTube especially likes when people subscribe to the channel while watching the video, so that I very much appreciate when people do that, and that helps the channel grow a lot. So thanks for subscribing. All right, so why Enphase? What I want to talk about in this video is going to be a longer format. So the solar industry is near and dear to me. I've been a solar enthusiast for a long time. Back in college, I actually took a solar installation class, like hands-on. I'm not a solar installer, but I do personally have solar on my house. I love it, and basically I know a lot more about solar than the average Joe and Jane, so I thought I would share my insights with you. Okay, so the stock is down 12%, and the reason for that is they missed on earnings. They missed pretty badly. If we look over here, where's our bad boy Enphase? Okay, so they were expected to report 78 cents EPS, and they reported 65 cents, so that's a pretty bad miss. That's like 20% miss, give or take, a little less, like 17-15%, whatever. And they missed 12 millions on the top line. Okay, and that's about a 4% miss. Anyway, so what do I think about these numbers? Let's take a look at this report, and we will go down over here. So these are the earnings estimates. Okay, now because we already updated our database for Q3 revenue, I preloaded a page over here which was loaded before the database update took place. So this still shows Q2 and does not show Q3. Okay, so let's take a look at earnings revenue. And so the analysts mid-range revenue expectation was 392 million, and we reported 380. So similar to earnings to investing.com. So the difference is about $40,000 over here on the revenue side. So it's pretty much in line with what they were expecting. And the EPS over here, so they were expecting 78. The reported was 65. Anyway, guys, what's interesting, the previous quarter was 8 cents EPS, and they were expecting out of the blue 78. I mean, that's a huge jump. Look at these 3 quarters. They were near zero. If you combine them together, it was like minus 12 cents over here, 15 cents over here, 8 cents over here, and you know, and then the analysts are expecting 78 cents. And I'm not sure what they're basing this on, what they were basing it on. Okay, but I think it's a pretty damn great quarter for Enphase. Okay, and now so this is where I have to repeat that this is not financial advice, but in my opinion, this is an amazing price. So in November, so if you look at the price chart, this is basically the lowest price since November of last year, when basically the whole market collapsed. Now that was a good time to buy, but those days are long gone. The S&P 500 went up like 30% since then, maybe even more by now. I mean, it was like 42. Let's look at SPY. Let's look at SPY. Oops. So just to see how much S&P 500 went up since then, I think it's like 30%. Okay, SPY is a S&P 500 ETF, and I believe it bottomed in October, November at around 420. Yep, and now it's 5,800. So it went up by about 30% since then. Yeah, and Enphase is basically down to the same price as it was back then. But anyway, talking about price action, I think it's a great earnings report. I mean, there over here it shows 33%, so that's GAAP EPS. And if we look at their report over here, so it is consistent with their diluted GAAP EPS. I'm not sure why. Oh yeah, this is non-GAAP. 65 cents is the non-GAAP, and 33 cents is GAAP EPS. Okay, anyway, so I think it's a pretty good report, and you can see the revenue is recovering very nicely. Of course, it's not anywhere near 725 million over here in Q1 of last year. It's about half of that amount, but it's much more than 263 million when they actually lost money. Okay, and I think the trajectory is pretty good, especially that during this quarter, one of their big clients, in their earning report, they do not mention the name, but if I remember, I think Sunrun went bankrupt. I think Sunrun was their client. Maybe I'm wrong, but anyway, one of their big clients went belly up, and first of all, they will not be buying from Enphase anymore. That's number one. Number two, they probably owed them money, and so those money will probably be uncollectible. They may repossess some equipment, but you know, that's still up in the proceedings, up in the bankruptcy court, whatever. So with all that said, the revenue, I think, is on the right trajectory, and so I think Enphase will have a great future. And why am I saying this? Okay, so first of all, what you need to understand is that American electrical market is ever growing. It's always increasing, and at current stage there is not enough supply. Like, when we say not enough supply, meaning that the growth in demand is outpacing the growth in supply. So there, people and companies are using more electricity than is being added to the US grid. And on top of that, we have these huge, gigantic expansions in AI data centers, and those will, I mean, the one data center can consume as much power as like a town of 100,000 homes. You know, like a big town. Those NVIDIA GPUs, they're pretty power hungry. Okay, and they work 24/7. So like when you go to sleep, you shut off everything except for, like, I don't know, your refrigerator. Maybe you run your AC, but usually, like, it's dark outside, so it's there is no sun. The temperature already went down, so your AC doesn't have to work as hard. So even on a hot summer day, your electrical usage when you go to sleep is lower than during the day. Whatever. Those GPUs, those AI GPUs, they work 24/7. And actually, I don't want to even include them in this whole calculation. I have a slightly different calculation that nobody talks about. So basically, states like California, New Jersey, New York, Massachusetts, to some degree Connecticut, and many more states are joining this cohort where they are requiring or helping people transition into electric vehicles, into heat pumps, and go away from gas-fired equipment such as stoves, such as gas-fired heating systems, boilers, furnaces, whatnot. And that alone will almost double the US residential electrical demand within 5 to 10 years. Now, the share of EVs right now is pretty small, but it's growing, and it's growing pretty fast. Like, even though this year, for example, Tesla sales, they will be moderately higher than last year, so maybe they will grow only like 10% in terms of raw numbers of cars sold. But keep in mind, that's still double of what was sold last year. So like, they will exceed the number of cars that were put on the road last year. They were by more than double, okay? And that will be a story every year. Like, sales of Teslas will most likely increase every year going forward from the previous year. The rate of growth, nobody knows, and this video is not about Tesla, but the number of EVs, they're ever growing. And so just think about it. An average US home uses about 750, well, this is old news, they used to use 750 kilowatt hours per month, okay, 750. But now to charge your Model Y, you need about 90 kilowatt hours, maybe almost 100 with all the losses in the, you know, in the conversions, all of that good stuff. You need about 100 kilowatt hours of AC power to fully charge your Tesla Model Y from 0 to 100. Okay, now that usually doesn't happen, but you get the gist. All right, and so let's do a quick calculation. So an average person drives 1,000 miles per month. Okay, 12,000 miles per year. So Model Y has a range of about 290 miles. Now usually you don't get that, so let's call it 275. Okay, so we divide, let's cancel this out, 1,000 divided by 275, so that gives you 3.63 times that you need to charge your car per month. You multiply that by 100, and basically 363 kilowatt hours is what you will, if you get an electric car, that's what you will be using to just to charge your Tesla. Okay, and that's already half of a typical household power consumption. So that increases it by 50%. Okay, and then so states like New York, they already, I believe, made a law that you cannot install new gas-fired heating equipment in new construction buildings, and you can still do a retrofit, meaning like if your old heating system broke, you can still replace it with a gas-fired boiler or furnace or whatever, but not in new construction. And also what they're doing, and many other states are doing the same thing. California is not so much part of this whole thing because, first of all, there's not a lot of natural gas in California. There is, but it's not a widely used stuff, and it's mostly used for cooking, not for heating. California is a pretty warm state, so there's not a lot of heating going on in California. But in states like New York, the houses need to be heated. It gets very cold in the winter. Okay, so what they're doing is they're taking away the incentives from gas-fired, even high-efficiency gas boilers and gas furnaces, and now you do not get any state rebates, any state programs. And what they're doing is they're pushing you into a heat pump. And in the summer, heat pump is amazing. It's usually twice as effective as a conventional air conditioner. If you look over here, so I loaded California here, and basically a 5-ton unit is what's needed for like a 2,500 square foot home. If we go to like 4-ton, okay, like your typical 2,000 square foot house, you would need a minimum of 4 tons in California in most cases. And so this calculator basically like estimates how much money it costs you to cool your house. This is not heating, just cooling. And so I want to demonstrate. So this is your current air conditioner on the left, and the new AC, which is actually a heat pump. 18 series a heat pump. You cannot find the conventional AC in this high efficiency. And so this here, it's a very interesting thing. So if you live in California, now if you, in LA, it doesn't get extremely hot, or maybe that's, so I don't live in California, so I'm not, there's a city in California that has fairly mild weather throughout the year, like it doesn't get super hot or super cold, and I'm not really sure if that's LA or San Francisco, but whatever, most of California is pretty warm. Okay, and so let's say you're using your AC about 18 hours a day, because if you, so at night you sleep, like you come home at 5, let's say, so from 5 until you go to sleep at like whatever 11, 12, that's 7 hours. That's 5 hours. So that's 5 hours. Then when you sleep, it's pretty hot during the day, so another 9 hours. So that's like 14 hours. And then like you wake up, you run it for a couple hours, maybe like you stay home, maybe you have your wife home or whatever. So I estimate that you run your AC about 18 hours a day times 6 months a year. The other months you run it a little less, but let's call it 180 days because you're there most of the time. Come on. So 18 hours a day times 180 days. This is approximate, but basically you get 3,240 hours per year of AC runtime. Now I only put 2,400, so if we do 3,200, that's going to be a lot more money. And over here, so actual, like when this page loads, it actually shows like 31 cents, but that is average throughout the state, and that is a complete, because this data comes from the government, it's incorrect as always, or I wouldn't say they lie, they just make it look better than it is. Okay, so if we look at this rate plan from PG&E, the biggest, or one of the biggest power suppliers in California, okay, and this is effective on October 1st, 2024, so this has just been published 3 weeks ago, and you can see that average rate is like 50 cents or 40 cents. I think above or below baseline is how much is your earnings, how much money you make. If you're poorer, so to say, you pay the 40-cent baseline, but then at night you pay. So from 4 p.m. when you come home to 9 p.m. you pay 51 cents. Okay, and then winter season it's a little less, but then you don't cool your house as much. So most of that load happens during the summer. And here they say from from June 1st to September 30th. So that's like 4 months. Whatever. So there are other plans. I really don't understand what these plans mean. But okay, so let's call this 45 cents. Okay. And so this just shows you how much your new cost will be, which is still kind of insane. Just for cooling your home, you'll be paying like $4,000 if you get the top of the line cooling system, not your old central AC, and then it will cost you $5,300 to cool your home. Okay, so where I'm going with this, is that number one, the states are pushing people to buy electric cars, heat pumps, and all of that power-hungry equipment, and basically transition everybody to 100% electric homes. You know, they're taking away incentives for gas-fired equipment, high efficiency boilers, high efficiency furnace. I'm not even talking about oil boilers, because nobody gives you rebates for those. Propane, like, yeah, there's a lot, like say New Hampshire, Vermont, Maine. Those states are primarily on propane. If you're away from the big city, if you live in the woods, you're primarily propane. So nobody gets rebates for those. But if you're in the city, they're taking away the rebates, and they're giving you rebates for heat pumps. And so they're, I would say, quickly transitioning everybody to the heat pump and the electric stove and electric car. And then once all that happens, you will basically rely on 100% electricity. You won't have any alternatives. And that's when these prices. So again, the government says that average price in California is 31 cents. Well, look, where do you see 31? This is like the base. 32 cents is the base for people with the EV, but then during the day you pay 64 cents, and EV plan B 70 cents, and over here 52 cents. So nobody's paying 31 cents in California. Maybe some small town with a municipal power company, but yeah, whatever. So bottom line, California electricity is very expensive, and it's getting more expensive in other states. So if you guys watch Amit Investing channel, so in several of his videos, when it comes to Enphase, he said that, like, yeah, the price of oil went down, and so that negatively affects Enphase. And I have to disagree with him on this, because first of all, price of oil only affects price of electricity in regards to electric vehicles, because you have to charge electricity. And so if you use less oil, it doesn't even affect the cost of electricity. Like, if you use less oil, you use more electricity, and so that actually increases the cost of electricity. So anyway, what really affects cost of electricity is cost of natural gas. Okay, and right now cost of natural gas is near 20-year low, not adjusted for inflation. Okay guys, so check this out. Basically, this is the cost of natural gas. The units doesn't matter. What matters is this chart. So we're basically at the same point as we were 25 years ago in 1999. So, and this is the nominal price. This is not adjusted for inflation. So let's take a look how much this would be adjusted for inflation. All right, so this is BLS.gov website, and of course it looks like crap. Bureau of Labor Statistics, anything from government looks like crap. So basically, we're comparing from January 1999 until September of this year, and we're converting 229 adjusted for inflation, and so 229 becomes 439. Okay, and so what this means is that natural gas right now is about 40% less expensive than it was 25 years ago, and so that in itself makes electricity very cheap. Okay, so it should be 40% cheaper than it was 25 years ago. Why? Because majority of US electricity is produced from natural gas. Like, of course, there's coal, there is nuclear power, there's solar, and we will go into all of those. But still, your typical, most common, clean source of electricity is natural gas, and it's actually 40% cheaper than it was than it was 25 years ago. At the same time, the price of electricity in certain states has doubled in the last couple of years, but overall it's up significantly in the last 25 years. I'm not even going to calculate that. It's irrelevant, because there are many other things included in that cost of electricity, including like labor, benefits for linemen and other utility company workers, all kinds of things. But the raw input costs for natural gas are 40% cheaper than they were 25 years ago. That's like insane. That's a negative inflation. So anyway, now talking about let's talk about nuclear. So, and nuclear, I want to talk about nuclear in regards to whatchamacallit, all those AI data centers that are being built. So there's this company Oklo, and they're up in the last couple of weeks. They're up 100%, okay, in 2 weeks, and in 1 month, in 1.5 months, they're up 4x. Okay, over here they were like super cheap, and then I believe the news that the ChatGPT guy, the co-founder of ChatGPT, Sam Altman, that he invested into Oklo, and so the stock price quadrupled in 6 weeks. Whatever, it quadrupled because they are going to supply electricity to the data centers. So I'm not okay, and they raised a bunch of money over here and paid off the debt. So you can see they had like $420,000 in cash and $77 million in debt. All of a sudden they have $235 in cash, zero debt, so they paid it off. So somebody put in about $300 million in them. I'm not sure who, whatever, it doesn't matter. This company does not make any revenue. Okay, and so another thing I want to show you is the permits for nuclear power. And where I'm going with this is that people say that all this EV stuff and all these heat pumps and now all the AI data centers, they will be powered by nuclear. So here is another government website, nrc.gov, and this is Nuclear Regulation Commission. Now, as any government agency, their data sucks. And why I say that? Because these are open applications for a new nuclear reactor. So their last application was 4 years ago in 2020. So right before the COVID thing happened, it was for Oklo. And I believe it was for an experimental reactor, not the actual like production reactor. So this company Oklo that Sam Altman invested in, they applied for a nuclear reactor 4 years ago. They were denied. All right. So there is nothing in construction right now. There is no permits. Maybe there is something in construction. And the last permit issued before that was in 2009. Then there were like 4 permits in 2008 and 3 2007. A couple of suspended in 2008, withdrawn, whatever. So for basically 15 years there was nothing. Then Oklo, right before COVID, they applied, they were denied. There is nothing under construction as far as I'm aware. Now again, because this is a government website, it could be completely like outdated, but this is the information we have. Another thing, it takes 7 to 10 years to construct a nuclear power plant. With all the regulations and permitting, probably closer to 10 years, because it takes years for the application to be approved, and under this and that, and then you have to go through the not in my backyard people who will say no, we don't want nuclear power here. So you have to find a site, a lot of red tape. Where I'm going with this is that while Enphase had a pretty bad year, and I'll touch on why they had a bad year, and also Solar Edge, they also had a terrible year, and you can see here for them it was much more terrible. They were losing tons of money. Like, look at this. They were losing like, this is per share. Where is the, okay, 130 million, 157 million, 162 million, and their cash pile is dwindling. But I am not talking about Solar Edge in this video. I'm talking about Enphase. Okay, so basically, for Enphase, so people like Amit, so I'm not saying he makes bad conclusions. I'm just saying he doesn't understand this industry well enough to make the conclusions. So he says that nobody wants to put solar on because the electricity is getting cheaper, which actually it's not. It's only rising in price. I've been tracking cost of electricity for some time, partially because I have solar, and I care like how much I get in rebates and all that good stuff. Anyway, another thing, Amit lives in New Jersey, and in New Jersey, the electricity in New Jersey is cheaper than national average. So that includes like states like Nebraska and Dakotas, where electricity is cheap because they have natural gas over there, and so like there's not a lot of air conditioning. So electricity is just generally cheap in those mountain states and the Midwestern states. Like even Chicago, even Illinois has electricity that's cheaper than national average. And then California is on the other side of the spectrum, where it's like over 50 cents kilowatt hour, whatever. So national average, I think it's about 17 cents right now. In New Jersey, I believe it's about 15 cents per kilowatt hour. And so when Amit says that nobody wants solar in New Jersey, because electricity is cheap, solar is more expensive because of high interest rates, and this is why now I'm going to touch why they had 3 bad quarters this year. But in New Jersey, people don't want solar, but in California, people love solar. But there's red tape from the government where they took away net metering. Okay, and so what net metering is let's say you're not in your house, you're at work during the day, the sun is shining, your solar panels are making electricity. And now what was happening before, because now every new house is required to have solar panels on them in California, there's overabundance of solar electricity during the day, but because people are not home, many of them are not running their air conditioners. So they're at work, and at work their conditioners are more efficient, the buildings are more or better insulated, and all of that good stuff. But then they come home, and basically like PG&E and similar companies or utilities in California have no use for this solar electricity during the peak hours when the sun is up, but people are not home to run their air conditioners and charge their EVs. And so before, what they were doing is they were taking your electricity from you and giving you credit 1 for 1. So let's say you generated 1,000 kilowatts, they would give you 1,000 kilowatts credit, and so you could use it at night to cool your house, to charge your EV, and this and that and blah blah blah. Okay, so then last year they created NEM3, net something metering 3.0, which is the latest one. That was about a year ago. And so now they pay you 4 cents per kilowatt hour during peak sun hours when you're not home, and then when the sun goes down you have to pay this crazy rates of like 61 cents. Remember, they only give you 4 cents per kilowatt hour, so like that doesn't even make sense. But how this benefits Enphase? So what these people and California at the same time is actually like giving people incentives to install battery storage at their house. Now, if you live in a northern state like New York, battery storage is kind of useless, because if you have a heat pump, remember, New York is pushing people off gas-fired equipment into heat pumps, and you can heat your house with a heat pump, but it's an air conditioner, so it uses a lot. When it's cold outside, it uses a lot more electricity, because let's say it's minus 20 outside, not even 20, 0 degrees outside, okay? And you set your thermostat to 70, so you have to make up 70 degrees of difference between the outside temperature and the indoor set temperature. That's 70 degrees. However, when it's summer and it's say 90 degrees outside and you want the same 70 degrees, your delta or difference between the outside and inside is only 20 degrees. So you need about 2.5 times more electricity to condition your house with a heat pump, because heat pump is a two-part system. One is outside, where it extracts heat from the outdoor air. I'm not going to go into the physics of it, but it just believe me, it works. And so you extract heat from the outdoor air, which is like below freezing or whatever. There is still heat. If you ask in the comment section, I'll just explain it. So basically, it uses refrigerant, and the refrigerant's boiling point is about most of them use R410A refrigerant, and the boiling point, or the temperature at which that refrigerant turns from liquid to gas, is about minus 54 degrees Fahrenheit. And so if it is 0 degrees Fahrenheit outside, you have that 54 degrees spread, or basically that 54 degrees is what is the amount of heat you can extract from the outdoor air. So the higher the outdoor air temperature, the more heat you can extract. Okay, so but even when it's 0 degrees Fahrenheit outside, there is still 54 degrees of heat that you can extract, because the temperature of the refrigerant is minus 54 and the outdoor air is 0, so you can extract that 54 degrees. Now the efficiency drops, you need to use more electricity, and remember, your set temperature is 70 degrees in the house, so you have to make up 70 degrees, and it takes a lot more electricity. Now, so where I'm going with this, I don't even remember where I'm going with this. It doesn't matter. Storage. Okay, yeah, I was talking about battery storage. And so in California, if you have, say, 30 kilowatts of solar storage or battery storage, okay, and let's say your air conditioner is whatever, doesn't matter, let's set it to 1 hour, and we'll see. So it uses for an 18C AC, forgot the formula, let me quickly look it up. Okay, here we have our formula. So we take your 4-ton air conditioner. Okay, so that's 48,000 BTUs. We divide that by, let's say you have like a 14 series, which is typical for California, like a typical air conditioner. Okay, and so you're using 3.4 kilowatts per hour. And that's at maximum compressor usage, but your compressor doesn't run like the whole time. Okay, and so let's call it, let's say it runs for like 20 minutes per hour, so you divide that by 3. Okay, so 1.2, let's call it 1.2 kilowatts. And so overnight, so from the time when the sun goes down until it goes up, and like in the early mornings the solar is not captured because of very high angle from solar to the sun, let's say that it's like 12 hours. And so like with 15 kilowatt battery backup, you basically collect enough energy throughout the day to use overnight. Okay, and then next day you collect more energy, and so pretty much you don't use any electricity from the grid, or you use very little. Even like most people probably won't install more than 15, although if you're already doing battery backup, I would just like recommend people do like 20-30 kilowatt hours, because sometimes the sun doesn't shine for a couple of days, but you still need electricity. Sometimes the grid goes out, so 10 kilowatt is kind of like lame. If you're doing battery backup, it's better. Like, and it's expensive, I understand, but if you look at this presentation, let me find it. So they had a really good, so over here, and where I'm going with this, it's actually good for Enphase. Okay, so they're saying that one QM battery, and that I believe is 5,000 kilowatt. No, right here assumes 10 kilowatt battery. Okay, costs $6,700, and then you have to pay for the installation, permitting, blah 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 blah. So let's call it 10 grand per 10 kilowatts, maybe a little bit less. And I'm actually not sure if these numbers are include installation or not. And right now the price in 2022 and beyond, it's actually 65. So let's call it like $6,000. So like you can spend 12 grand, and basically that gives you 20 kilowatt hours. Let's assume you're still in California. So over here, so 24 hours of AC time, boom boom. So basically your cost to run AC throughout the year is about like $2,800, and let's say you're paying 17 or let's say $16,000 for your battery backup, but then it's with your solar, and so 16. Now don't forget that most likely your electricity is more expensive. It's more like 51. Boom. So call it 3 grand. Okay, so 16,000 divided by 3. So basically in about 5 years and 4 months, that battery backup will kind of pay for itself, because now you can store your electricity. Okay, and without battery backup, it doesn't even make sense to put solar on your roof in California. But with battery backup, you can actually store your electricity in the battery and then use it for whatever needs. You can't really charge your EV with it. You need a much better, much higher capacity of battery backup for an EV, because again, EV takes like Model Y has like a 90 kilowatt, or maybe I'm wrong. Let me look it up. Model Y long range battery size. Boom. Okay, so they call it 75. I won't say it goes 330 miles. Let's call it, okay, whatever. So 75 kilowatt hours, and your home backup is 20, but to actually charge it, you need more like 85 kilowatt hours, because like of the conversion losses and all of that good stuff. Let's call it 80. Okay, you lose 5 kilowatt hours to charge it from 0 to 100. Okay, so if you put a 30 kilowatt hour, like you probably don't drive 300 miles a day, most likely. If you do, you probably do Uber and or something like that, and you probably get compensated for all that driving. But yeah, with a 30 kilowatt hour, you can probably charge like your Tesla a little bit every day, you know, like 50 to 100 miles. You probably don't drive more than 50 miles a day, and well, maybe you do, but whatever. Yeah, if you drive 1,000 miles a month, and there's like 2 weekends, so let's call it 20 work days. So yeah, you drive about 50 miles a day, and yeah, that's like 10-12 kilowatt hours. So yeah, you can actually, with a 30 kilowatt battery backup, you can have enough to charge your to use your air conditioner in the winter and to also like slowly charge your Tesla and whatnot, and you really don't use any electricity. So, and again, in California, without battery backup, it doesn't make sense to install solar panels, because you would be getting 4 cents per kilowatt hour. Crazy, that's like, and then you would have to pay like 50 cents. And it makes no sense. So, but how is, like, all this long talk, how does this benefit Enphase? Enphase, if you look at their earnings report, they have, so this Q2, they mentioned over here that they shipped 173 megawatt hours of IQ batteries, and I believe in Q2, let's look at the top, how much they shipped in batteries. 120. So that's like a 50% increase. Now, if they keep growing this at like even like a 30% annual, but this is quarter over quarter, like 50% increase. Let's call it like 50% annual increase. The battery storage, they're using lithium iron phosphate batteries, and those are cheap, guys. They're very cheap, and overall lithium is getting cheaper every year, like significantly. And so the profit margins on this are amazing. And so the more battery storage they sell, the more money they make. And I think this is actually a pretty great trend for Enphase. Now, okay, so I'll talk about now why these 3 quarters were pretty bad for Enphase and also for SolarEdge as well. Now, SolarEdge is not out of the woods. They have 4 quarters. So both of these companies also work in Europe, not just in the United States, although for both of them, US market is bigger. It's their biggest market. In Europe, at least on today's earnings call, Enphase CEO said that situation in Europe is not improving and will be getting worse for the foreseeable future, meaning like 3 to 6 months out, it will probably decrease. So this quarter, it decreased by, I believe, like 10%, he said. It doesn't matter. It's they said their US revenue increased by like 40-something%. I could be wrong. You should listen to the earnings call if you want to. But in the US, their revenue increased, in Europe it decreased, and same situation for SolarEdge. It went down a little. It's just like not good right now, because, you know, while in the US, the government has been doing everything they can to postpone, delay, whatever you call it, the recession, which I think is inevitable. I could be wrong. A lot of people so far have been wrong on the on expectations of a recession, but people are not doing, like, your general person in the US is not doing well financially. They're doing less well than they did a few years back, call it 5 years back or 10 years. Like, they're probably doing worse. They're probably worse off today than they were 10 years ago. Not getting into politics, but a lot of people are like asset rich, but, you know, cash poor. What this means is, like, if you own a house, the valuation is through the roof. It's very expensive, but many people barely have enough money to pay the mortgage and pay the bills, while their house is like, you know, it costs 700-800, like $1 million. It depends where you live. Some places it's 300,000. Average house price in the US is like 425, you know, and before COVID it was like 250. So in 4 years ago, so the value of their home has increased, but on the back end, their taxes are going up. The stuff is getting more expensive. To realize that increase in the house value, they would need to sell it. But to sell it means you have to pay the realtor, and you still have to live somewhere, so you have to buy a house. But the other houses are also expensive. And so, like, there's this phenomenon where a person is rich on paper, but doesn't, like, in terms of net worth, but doesn't have money to pay the bills. Yeah, so that happens. Where I was going with this doesn't matter. So about the recession, but basically in Europe things are much worse than here, and in many other countries things are getting worse. Well, I'm not talking about recession in general. I'm just saying in terms of Enphase. So the interest rates were high, and in the solar industry. So I have a friend who actually is a solar salesman, and what he's telling me is most of their jobs right now are so-called PPA, power purchase agreement, okay, or leasing. So basically what happens is the solar company comes, they install panels on your roof. You agree to some sort of power purchase with them, so where you pay less than whatever your utility is charging, okay, but you don't own the solar panels, you just buy electricity from them. So a lot of solar sales are done that way. But if you want to actually own the panels, okay, you either cough up the money up front, or you settle for a 10% interest, okay, and a 10% interest, and that's in a that's in a it's a good scenario. For solar loans have become very expensive. Like I remember when I was doing my solar, so I started in 2021. That's before all the cumulative easing, or rather tightening. That's before the, you know, the inflation is transitory thing with the J. Powell. The interest rate on a solar loan was 6%. But since then, back then the interest rates from the Fed were like closer to zero. Now they're about 4.75. Okay, and they just cut by half a point, so they were like 5.25 to 5.50. Okay, and that made the solar loans about 10-11%. But then, and it's unfortunate because solar sales are unfortunately like a lot of unscrupulous and a lot of, you know, like just not good people do solar sales. And what they do is they're like, oh yeah, we can lock you in at 3%, but you have to put like a down payment. And what people do is they finance, like, you know, when you buy a house, you can buy down the rate with points. It's usually like 1 point, which is 1% of your mortgage amount of your loan. So let's say you buy a house for $100,000, you can buy a quarter of a percentage point on the rate for 1% upfront. Okay, so if you're getting a let's say they offer you a rate of like 5.25, 5.25%, you can buy it down by 1/4%, and you would have to pay, if I'm not mistaken, 2 points. I think it's every 1/8 of a percentage point is like a point of the or 1% of the house of the loan amount, or maybe it's a quarter. It doesn't matter. So basically, you can buy down your rate with points. Okay, each point is a percent of the mortgage amount. So like if you want to reduce it, your mortgage amount becomes like, instead of $100,000, it becomes $101,000, but your mortgage rate goes down by a certain amount. So you can do something similar with solar. And but salespeople in this, not just salespeople, also like the solar loans people, while they offer you like a buy down, you buy down your rate from like 10-11% to 3%, but you give them upfront like 40% of the total cost of the system. So let's say your system costs $20,000, 40% of that is another $8,000. So instead of paying 20, you pay 28. But they built it into the loan amount, and so like you pay less interest, but you give them upfront another $8,000. So it's like completely insane. And $8,000 doesn't seem like a lot, but guys, it's 40% of the whole system. And so what happened, because of this insane rates, people like, oh, either I have to pay like 10-11% rate up, or without any like buy down, or I pay 3% on the $28,000 or whatever, 40% more. So people just weren't buying solar, and especially like at the same time, like the inflation and all that good stuff. And so like throughout these quarters, it was just pretty tough for the solar companies. At the same time, there were like several solar companies that went out of business. If you watch reports on the NEM3 in California, like it just created, first of all, as soon as that thing went into effect, the net metering 3, the solar installations in California dropped significantly. And I can show you this on the chart. This right here, I have a chart, so you can see here. So this was growing tremendously up until 23, and then in 24 it basically all flattened out. Like, yes, and this is cumulative installation, guys. So this chart is cumulative, gigawatts or megawatts, doesn't matter, but you can see the chart is like significantly not like flattening. Okay, so here it only went up by like 15% from year to year, but here like the jump from 22 to 23 was 30%, and here it's only from 36 to 38. No, that's not even 10%. Now, yeah, the year is not full, is not like, it's not over, but the number of residential installations has slowed down significantly because it became very expensive. So but now we're cutting the rates, so that will be good for Enphase. And on top of that, a lot of their, like, especially because of California and other states, their battery installations are growing pretty significantly. So that's very good. And if we look, let's close this. Let's look at Q1 just for comparison. So press releases, no, over here, Q1. Let's look at financial results in Q1, and the battery sales were 75. So guys, check this out: 75 megawatts. Then it went up to 120 in last quarter, in previous quarter, so Q2, from 75 to 120, that's a 50% growth. And then from 120 to 173, that's another 50% growth. So I think next, so I haven't really read their guidance because this just came out and it's a lot of information. I wanted to make this video as soon as possible, but basically I think the future for this company is pretty amazing. And the fact that the share price dropped so significantly, like 12% in one day, I think it's an asymmetrical investment opportunity. Now, once again, this is not financial advice, and will I be buying this tomorrow? Probably not. I think tomorrow it's going to drop another 5%. So that's my guess. I think it will drop to about $78, $77 tomorrow, you know, by the end of the day. And actually, I'll come back to this and make a quick video to show to see how much it dropped. But you know, judging from previous earning calls, not just on this company but on many others, usually the sentiment after hours, if it's like really bad, then the next day gets even worse. Okay, because today it was just like, you know, people who have access to after hours, some like hedge funds and some individuals on Robinhood, because Robinhood is the only like consumer facing broker that offers after hour trading, at least in the US. No, actually no, I'm wrong, but like 24-hour trading, but this happened after hours. Anyway, so these were like some hedge funds that were selling, and institutional holders, as well as like some individual investors that were like, okay, I gotta get out of it. But tomorrow, I think during market open, it will be even worse. Like I said, it will be 79, and I think over the next few weeks, it will bottom out at about $69, $70. So I think that's what I'm thinking. Okay, so again, not financial advice, but what I would be doing, I would be looking at 2-year out leaps. Let me show you. Okay, so here we have some really long dated call options on Enphase. And again, guys, I operate out of assumption that number one, nuclear will not replace the current needs of the electrical consumption in the near term, because it takes, let's call it 7 years to build a nuclear power plant. As far as we know, there's no permits out there like that are waiting approval or have been approved right now. Everything is basically 15 years old, according to the government website. Now there could be better information. I know that there's this guy, nobody special. So he's a perma bear. Number one. Number two, he has been working in nuclear power, on a nuclear power plant, so he knows a lot more about this stuff than I do. And I wanna ask him. So first of all, you guys, give him a shout out. I like his channel, but I just, how to say it, like the stuff he says is mostly correct, except for when it comes to Tesla. I disagree with him, but it could still be correct. But because he's a perma bear, if you followed his advice over the last, say, 2-3 years, you missed out on massive gains. So that's just like my take on it. I listen to his morning livecast just to have like a complete perspective. It's the bullish perspective and the bearish perspective, and then make more educated decisions. Because guys who are permanently bullish, they don't look at the bearish point of view. And so I think, as to be a better investment, for me at least, I want to hear both sides. Okay, but looking at just like if you had followed his advice as far as investments, you would miss on a lot of gains over the last couple of years. So just something to keep in mind. And once again, not a financial advice, but I think subscribing to him and listening to him is great for overall like knowledge of the financial market in general, or like economics of the US and global stuff in general. I think his information is great. But besides that, he knows the nuclear energy market, because he actually worked on it and he follows it. He's interested in it. He knows much more than I do. And so I'll find out from him what's the state of current, what is this thing, where we stand as far as applications for nuclear reactors. But according to government, there's nothing in the works right now, and even if there was something approved just recently, it still takes 7 years. And what that means is that nuclear power will not come online for the next 7 years, so until like 2032, give or take 2030 at the earliest. Like, let's say they build something very fast, so like super fast, and nobody's complaining, and everything is approved super fast. It still takes a long time to build this thing. So for the next 5 to 7 years, those nuclear plants will not provide a single kilowatt of power to the grid. And so the alternatives are gas power and solar. For solar to be viable, there needs to be a lot of storage. And so that's where Tesla will shine, because their battery storage is growing like crazy. I think like in Q1 to Q2 it grew by 100%. This quarter probably won't be as high a growth, but still they're like, it's super profitable. And nobody gives like a lot of credit for their battery storage, but I do. For me, it's like a big part of the business, very profitable, and a lot of growth for it. But there will, for all those data centers, it's just not enough. But anyway, guys, by the way, I didn't even cover the whole commercial versus residential and like the product stuff, the product makeup of Enphase. But basically, most of their products are residential. It's basically not a commercial product. Yes, they do have a commercial inverter, but those are like for small commercial, and most of the commercial jobs are usually like industrial size, 1000 kilowatts, like, so 1 megawatt or more. And the limit on these commercial inverters is 200 kilowatts. I mean, that's the design, so 60 to 200 kilowatts. And but anyway, like, I want to talk about, I think that's a whole special when I kind of do a deep dive into the finances of this financial report, the numbers. Maybe we'll talk about the product mix of Enphase. But basically, so what I'm going to do, or what I would do, and so again, not financial advice. So tomorrow when the market opens, this $50 call into 2027 will go down in price by about $10. So it will be about $45, $46. If this continues dropping to say 78, 79, so another like $2, this will be like, whatchamacallit, like 45-ish. And so basically for $45, your break even will be like 95. Okay, so that's much higher than the current price, but you lock up only like 50% of the share price. Okay, you lock it in for 2 years, but the amount of capital you have to put down is about 55%, like in terms of like per share. Okay, so if you were to buy 100 shares tomorrow, that would cost you let's say $80 or $8,000 per share per 100 shares. But with a call option, and I mentioned this would cost about $45 tomorrow, it would cost you $4,500 to control 100 shares. So benefit number one, you can sell shorter dated call options on it. So let's say you want to buy, it's not going to allow me because this is limited margin. But anyway, so that's a whole different topic. But what I would do, I believe this is a very good price, like around 75. It's an amazing price for this company. And again, guys, the reason it fell is because they missed on top and bottom line. Okay, yeah, that's buhaha, that's horrible and whatnot. But look at these numbers. Like, look at the revenue. It's growing. It's like over here. So yeah, you see this CAGR. It's actually comparing to 4 quarters ago, so it's down. But if you compare it to this one, it's up 25%. Compared to this one, it's up like 30-something%. So this is why I think. And then the next quarter, let's look for financial outlook for next quarter. So 360 to 400 million, and this is, and then over here, that's outlook. So they guided for 370 to 410. Okay, so basically they're saying next quarter will probably be, let's call it 370. Okay, I mean, if it goes up, it would be amazing. If it goes down a little bit, it wouldn't be as amazing. So I guess people were disappointed at the guidance than the actual miss of the top and bottom line. Because I think on paper this is amazing. But what I really like is that they're growing their battery storage tremendously. Like for the last 2 quarters, each quarter, like sequentially, they grew it by 50%, give or take. Okay, and I think that's like maybe 45%, but still it's like amazing. And that's a high profit product, high margin product, battery storage, and it's becoming ever less expensive. So the cost of LFP batteries is going down like crazy, guys. So yeah, so I like it. Maybe next quarter won't be as rosy, but overall the demand for electricity is increasing. And right now, and that's why I actually like this slide. So on a typical job, in 2019 they would get like $2,000 per home, okay, residential, give or take average. But next in 2021, so 3 years ago, they would collect $9,000 per job. But now it's like 12, probably 15. If people get more batteries, it's like almost $20,000 that they collect, mostly because of the batteries. And because of states like California and others who are, so I think, don't quote me on this, but I think it was Kentucky who also like got rid of their net metering. But I think in Kentucky electricity is cheap, and so it maybe doesn't make sense to do solar. But electricity will be getting more expensive everywhere because they're like pushing people into EVs, into heat pumps, into all that good stuff, especially in like northern states where heat pumps will be used for heating. Oh man, the electrical usage will be through the roof. Anyway, so what I would do tomorrow is I would buy this leap for 50 bucks. So your outlay, you're paying a little bit of a premium, so you'd be paying like, it will be 80 tomorrow. So yeah, I guess it will be like $43. So you would be at a premium, and this would be at today's price. This was today's before close, because they announced after close, and price dropped after market closed, and it dropped by, let's look over here. Oh wow, 11 bucks. So tomorrow will probably drop another couple of dollars. That's my guess. We'll see tomorrow, and therefore this will probably go down to $42, and your break even will be like 92 bucks per share. So that's significantly higher than the price of a share tomorrow. But then like you lock in a lot less capital. You can still sell covered calls if you have level 3 on level 3 options on Robinhood. That's like poor man's covered call. Yeah, I think it's a very good use of funds. So, but why I most likely will not do it is because I sold an $88 put. So I'm already $6 bucks in the hole on that, and then like basically like $4. But by the time it closes tomorrow, I'll be down like 7%. Most likely will be assigned on that put. So I'll own my shares for about 85. So I won't need to buy another call. So I wasn't expecting this huge of a drop, but I think in the long run, this company, if you look over here, actually, I think this is a great chart over here, guys. Look at this returns. So SolarEdge, well, down 61% since May 2019. Enphase was up 4,500% at some point, and if we look price chart, so Enphase over here was like $7 in 2019 and went up as high as $3.35. Now, are we getting there anytime soon? No, we're not. But I think in a couple of years we'll be like around 200 bucks, 150. And so if you buy those leap options, I think in a year or so they can double in price at least. So that's what I would do. But again, it's not financial advice. All right, guys. So I know this was super long. I'm tired at this point. If you watch this video, I'm sure you're also tired. But I think this more or less deeper dive and looking at factors outside of just like financial results is kind of important if you are to invest in this company. You have to look at different factors affecting the electrical prices and the demand for solar going forward, and so on and so forth. And actually, so another thing, like I said, this is topic for a whole different video, but Enphase is getting into small commercial, and so it will help their sales, not tremendously. They're more into residential, much more, but it will add to the bottom line and to the top line. So it's great overall. It's a good news. And I've read some people on the solar forum on Reddit, and the results or opinions are mixed between, like, string inverters and micro inverters. And I won't go into technological stuff right now, but commercial guys, some of them are actually interested in micro inverters for smaller jobs. But yeah, so that's decent for Enphase. I think it's a sale, but I think that within like next couple of weeks it will drop a little bit more. I think it will be around $70. That's where I think it will bottom out. Now, if we look at price, there is yeah, basically the support is right over here. This is 78, and below it is uncharted territory. You're basically looking at pre-2020 prices. Yeah, if it breaks this support, I think it can go as low as like 65, 60 maybe even lower. So that's why maybe you shouldn't go heavy into this stuff. And by buying long dated options, first of all, you lock in like almost 2 years and 3 months of time at a pretty, I would say, pretty decent valuation. Like, yeah, it's a very high PE but at least there, you know, it's a positive trend overall. Now look, this PE is the same as it was in Q1 of 2022. Now, what was the price in Q1 2022? It was around, so after that announcement it dropped to 150. Now back then, and then it went up to 350, 335. Yeah, anyway, I think long term this is a great company to own. Maybe short term it will drop to like $70 per share. I think if it breaks the 78, it's the only support is over here 4 years ago. So we're in uncharted territory right now, boys. But yeah, I think I will be watching this like a hawk, watching like the overall trends, doing more research into solar. For that, Reddit is amazing. Just go into solar subreddit, ask your questions, and I will do the same. I will do a follow-up video. Yeah, guys, thank you for watching. If you lasted this long, if you did, here's a keyword. Put it in the comments if you lasted this long, and that will be, the keyword will be Reddit, because next video I will do into technical details, and I will do like research on solar subreddit. And so if you lasted this long, put a Reddit in the comment section below. I'll know that you watched the whole thing. Anyway, another thing, if you want to try this software that I'm using right here, this is DRIPCalc Pro, we're offering a 25% lifetime discount, and you don't have to pay if you don't like it. There's also 2 weeks completely free trial. So if you don't like it, just cancel, and you won't be charged. And if you do like it and you want to keep it, you get access to all these metrics, to the compare tool where you can compare two stocks side by side. So over here I have Enphase and SolarEdge, their earnings, free cash flow per share. So you can like quickly compare important metrics for different stocks. So cash and debt, revenue, EPS, net income, EBITDA, other stuff, dividends, so expenses, shares outstanding, all of that good stuff. Then analyst estimates, 2 weeks free trial, and then for life you get 25% discount. And even if we raise prices in the future, your price will remain the same, and we will raise prices in the future. I don't know when or what, but your price will be locked in with 25% off. And 1 month, if you sign up for a year, 1 month is like 2 cups of coffee. And if you sign up for a monthly billing, it's like 2.5 cups of coffee, 3 cups of coffee per month. And it supports the development of this software, and helps me a little bit. So yeah, anyway guys, I will put a link to the discount code in the description, as well as in the pinned comment. You can just like, if you're not logged in, there's a orange button, sign up over here. You can check out the pricing. I'll just quickly show you. It's $15 minus 25%. That's like I don't even know, but like $120 minus 25, that's like $80. No, 90 something. That's like literally $8 per month with a annual plan, and 25% off. And again, this, you try it for 14 days. If you like it, just keep it. If you don't like it, cancel, and you won't be charged, and your price will be locked in for life. Anyway guys, thanks for watching. Smash the like button, subscribe to the channel, check out this software. We're constantly updating it, making it better, and developing new reports. And put the keyword Reddit in the comment section below if you watched this far. I will see you in the next video with a follow-up. Thanks for watching.